Good morning, good morning. What's going on, Mr. Bear? How's everything? Let's see if we can get an episode going on today. And hopefully I am on right now. I should be streaming. So crazy earnings day we had yesterday, right? The overall market is up green right now. Anybody have any thoughts on what we saw yesterday? I think Apple did amazing, right? Apple, Facebook, two stocks that destroyed earnings. Right now we can see, right, the Nasdaq is up about 1% pre-market. Let's see if it holds. Let me just make sure I am live streaming real quick. No way, did they? I did not see that. Did they mention it, Mr. Bear, for sure? Or is it rumored at the moment? Seems like it's just rumors on this. Has it been confirmed? I would have expected it to. What's going on, Mr. High? Should you buy some Apple today? You know, Apple to me is probably my least favorite, but it always does amazing, right? Apple, I mean, let's say Apple stock. I do not buy stocks because they're big, right? That's not why, right? Apple is the biggest company, right? Market cap of $2.2 trillion. Even with that type of market cap, it can still keep growing, right? We can see they did have amazing earnings, and because of those earnings, they are up 2.6%. One thing I do want to say about Apple, right? Their revenues were up big. And even with such huge number beat, the stock barely moved. So they were really priced to perfection, in my opinion. Apple, at these levels, how I would play Apple if I wanted to get into Apple would be just buy a little bit and get some exposure over time. And if ever it takes a big dip, that's when I would go a little bit heavier. So yeah, right. You think so, Mr. High? What is it at right now? 4,000 and something, right? S&P 500. What are we sitting at right now? 4,100. 5,000 by the end of this year. That's a strong growth from now, right? That's still double digits. That's like 20, more like 25% growth, right? Let's do, oops, 4.183 times 1.25. 4.183 times 4.2. Oops. Yeah, so you're still expecting a 20% growth from where we're at right now, Mr. High. That's pretty impressive. That's pretty bullish. Right on average is about 10% historically, but let's see. Hopefully you're right? That would mean good things for all our stocks. Jim, what's going on? How do you feel about Taiwan Semiconductor? TSM, right? TSM is a great company. Yeah, I mean, it did, right? 2017, there have been obviously years when it's done that. I'm not saying it's impossible. Definitely pretty bullish on it though. TSM, right? Taiwan Semiconductor. Overall, the stock price is down a bit from its all-time highs. It's down about 15%. Market cap of 560 billion. So Taiwan is not a company I personally own. Overall, the chip and semiconductor market is one that I believe is going to be the future, at least for the next 10 years from now. So I do believe TSM will be one to improve over time. If I was personally looking for a semiconductor that doesn't have maybe as crazy type of growth, gives some form of dividend yield, and is definitely strong in the market, TSM is one I would play for long terms, right? But again, I don't own it right now, and at the moment, I have no intentions. Leo, thoughts on buying CRM? CRM, right? CRM. Let's take a look at CRM stock. That's Salesforce, right? Salesforce, I did a previous video on them. How I thought right here in the low 200s, it's been pretty quiet. Even with this run up, the stock I believe is still pretty quiet. I want to say it's like a hidden value. Uh, it's out there, right? It's this software company. It should be talked about, but not many people talk about it. The stock is down. Let's see, 15% from all-time highs. At these levels, if I wanted to enter Salesforce, I would probably enter with a little bit bigger than smaller position size. It is going to be a really quiet stock. I do think Salesforce is going to be pretty quiet, but they do great moves, right? They just their purchase of Tableau or Table Blue, whatever it's called, to overall do the infographics stuff. Salesforce, I think, is pretty impressive. Super quiet though. Let's take a look at Simply Wall Street real quick. I was wondering, Mobin, no, I don't. Penny stocks, not. I don't know if you would consider this a penny stock, OSS stock. Normally, people call penny stocks usually very small market cap companies. This is probably my smallest company, Mobin. It's OSS, One Stop System. This is, like I said, market cap of $102 million. They work a lot with graphics cards, accelerators. I've done a few videos on the Mobin, but this is probably the smallest company I own and the one I am really bullish on. Right, this one's going to be very volatile for anyone that enters this stock. You're going to see from its all-time highs, the stock has done 40% down. But I'm pretty excited of what they're doing. Yeah, this is definitely my smallest company with my most bullish sentiment. But because Mobin, it is a small company, it is a really small company, a super volatile company. It's usually a tier 3 stock in my portfolio. So those are usually like the smaller holdings. But even though it's a small holding, right, 100 million market cap, if this grows dramatically, it can really move my portfolio. Leo, were you thinking about buying into CRM? Do you have the stock right now? And let's see. I just want to see CRM. All right, CRM future growth 14.9%, right? It's not a slow grower. It is profitable. It is positive in cash flow from operations. Financially, let's take a quick look. Financially, they have very low debt compared to cash. They have $2.7 billion in debt and $12 billion in cash. So fundamentally, Salesforce is definitely one I wouldn't mind owning, Leo, right? Just looking at these fundamentals. Now it's really how their market is doing. How bullish are you in the market they're in, and go from there, right? CRM, they are a customer relationship management tool, but they are making smart acquisitions. So Leo, this is a stock that, let's say I had enough growth stocks and I wanted to maybe expand into like a profitable, not one that's growing at crazy levels like some of these growth stocks, but one that is profitable, one that is positive in cash flow from operations. Salesforce could make that list. Same with TSM, I believe. TSM could probably also make that list. All right, I think future growth, the company is expected to grow 12.9%. They're profitable, they're positive in cash flow from operations. They have a strong balance sheet as well, I'm guessing. Yeah, they have about 257 billion in NT. I'm not sure what thingy, but they have a lot more cash than debt. So just like I forget, Jim mentioned, this is a stock that maybe if I didn't want to put too much into a heavy growth stock and I was looking for companies that were still profitable to some extent, we're still growing at some great levels, are profitable, and are positive in cash flow, both TSM and CRM could make that list for me. David Becker, what's going on? Good morning. Hope you're having a good day. Let's take a look at Philip Morris, sure, PM. And then I actually wanted to take a quick look at some news that came out this morning. And I want to take a look at some earnings. What's going on, Doug? Yep, let's go. Facebook is killing it, man. Facebook did great earnings. One thing I'm super excited about Facebook is they're expanding their expenses on the hardware side. So it seems to me that they're pretty bullish in the overall like virtual Oculus Rift right now. Obviously they've talked about it, but them showing us now that they're going to increase their expenses for those types of reasons, it's pretty bullish in my opinion. I'm super excited to find more virtual reality companies out there, right? Because if Facebook is wanting to improve their market there, it means that that the consumers are ready for virtual reality, right? Virtual reality, augmented reality, these have been in the market for a long time. They've been in, for example, PS4 came out with the Sony VR, which was amazing, I think in 2016, 2017. So almost 4 or 5 years ago. But just because products come out doesn't mean consumers are ready for it. Now seeing Facebook really increasing their expenses there is showing me that, hey, consumers are now ready for this type of product. So now I believe it's time to really start looking at some other companies that are focusing in like the VR market and AR market, right? And I do believe Unity is a good play for me there. And I'm gonna have to find some other players. All right, Philip Morris, taking a look. Strong dividend yield, right? First thing I'm seeing, a strong dividend yield, a strong PE ratio. So I already can tell by these two metrics that this is going to be a slower grower. This is more of, hey, I really don't care much about actual revenue growth. I'm happy with the company fundamentals right now, and I'd rather just get paid through a dividend yield. I don't believe dividends are bad, just not a market I follow yet. But I do think it maybe in the upcoming months, I might start covering them a little bit more, right? Even with the stock price going up 23%, it still has a strong dividend yield of 5%. Oculus is selling for $299. Now going to be hard for others to compete. But the PlayStation VR, and so we'll take a David Becker. I'll take a quick look at that one too. The PSVR is also, oh wow, it's actually $400. Wow, I didn't know I paid that much a long time ago. That's crazy. Yeah, the Oculus at $299 is definitely a better buying opportunity. The only thing I really hate this about Oculus. I would actually have bought an Oculus even though I barely play games, but I don't have a Facebook account and I don't want to make a Facebook account. I actually don't even have an Instagram, right? So I can't even, you have to have an account with them to be able to use the Oculus, and I kind of hate that from them. I understand it in the business side. Yeah, and wireless too, right? It's pretty cool. So, Leo, could you share the stock you would add right now? Could you share the stocks you would add right now? I mean, uh, probably one of my stocks that I would add right now is definitely Unity. Even at these levels, my tier one stocks are definitely my favorite ones right now, Leo. I mean, obviously there's so many stocks that I wouldn't mind adding to right now, especially with the crazy pullback. But my main ones would probably be like Unity, AMD actually would be another one. Nvidia. There's just too many. Definitely just what I bought last week, and I might buy some more this week. I still haven't seen. So Leo, make sure to join my Discord channel. On my Discord channel, I post every time I buy a stock. So make sure to check me out there. Because right, there's so many stocks that I wouldn't mind buying, but I usually only end up buying like 2 or 3. Yeah, AMD, they did great earnings. I mean, they pulled back so much after their strong report. Right, they're down 5%. I do believe their earnings were strong. And to me, I am more of a Nvidia bull. I believe Nvidia is still completely undervalued. In the long term of things, like in 5 years from now, I think Nvidia will probably be the better return. But I think in the next year, AMD probably shows a better valuation. So I am really excited about this company. So both of them are pretty good. So let's take a quick look at PM for David. So Philip Morris, right? So future growth, right? Like I mentioned, this company, not a hyper growth stock. I wouldn't even consider this a growth stock. I want to say a slow to modest growth, near 5%, right? It's not bad. Remember, this is profitable, positive for cash flow. It's been like this for multiple years. I don't think that's gonna change anytime soon. Financially, right? They're also they're a bit leveraged, right? They have more debt than they do have cash, but I think that's okay, right? This is a company, once you have steady income, once you have steady earnings, being leveraged is not a bad thing. Right? You and I, for example, I like to think balance sheets like a personal thing. If I have a stable job, if I have a stable income, if I'm making good money and I'm able to pay a bit of leverage, I don't mind taking out a mortgage, right? Because I'm able to pay that even though I am going to be leveraged a lot compared to my cash and short-term investments. I see the same thing with companies. If you have a stable income, which PM does, it's okay for you to be leveraged for that reason. So PM is definitely a cool, fundamentally it's fine, right? I slow grower. This is more of a stock, David, that if I didn't want any type of growth in my portfolio, I wanted more like a dividend yield, I probably would go pick up some PM. Now it's just pretty much in the market they're in, right? If they are just in the cigarette market, how are they improving from there, right? We're seeing a lot of countries, and I don't know, right? I believe we're seeing a few countries that are getting pretty strict with cigarettes. How's the overall population going into this? So that's more of the real question. Like, is this a market I see in the next 5 to 10 years? And I think that would determine if I was to buy the company. Doug, no, I tried to, and I do have a position in Shopify, Doug. I opened up a position when I opened up a position in Tesla. Last week I tried to increase that position in Shopify, but for some reason the order never went through. So I took it as a sign. I should have taken it as a sign that, hey, it wasn't enough money. I should have gone heavier. Doug, Jose, yeah. Albert, why Microsoft went down? Do you think it's gonna go up soon or not? Right now, it was at all-time highs. Albert, Microsoft, right? They had great earnings, but I guess they were priced to perfection, and that's what ends up happening. This is, I think, the real risk, not the real risk, just the real reason there's always buying and selling opportunities in the stock market, because you don't know what is priced in. So Microsoft had great earnings, right? We can see from its all-time highs, though the stock is down about 3%. It's barely down. It's for the past 6 months, you can see it's still in an uptrend. But them being down after earnings just shows me one thing, that investors were priced to perfection on Microsoft, and Microsoft didn't give that price to perfection. Sometimes it's the other way around, right? Sometimes we see it like Facebook, where it seems like investors were expecting more negative than positive from Facebook, or I forgot what I said. Did I say Netflix? But I meant from Facebook. And then the stock price jumps because they didn't price everything in. And I do believe that's the buying opportunities that the stock market gives. We have to find where investors are expecting too little from. David Becker, they are big time into the e-cig. Yeah, so again, I'm not a smoker, neither e-cig or regular cigarettes. And I don't know too many people, like most people in my circle, don't do either as well. So for me, David Becker, personally, it's not a market I would see, because just I don't see that type of growth. I don't see, hey, my friend just picked up this and now they're smoking this and this and this. So again, right, the e-cig probably is growing. But me personally, I don't see that growth happening. Mobin and NDM back to 15 before August. Long shot or viable? The great thing about this stock market, Mobin, is that even a long shot play is viable, right? Volatility works both ways. Just as the stock price jumped off the cliff that fast, it can jump up that high. Is it viable? Don't think so. Long shot for sure. It's possible. Let me just say that it is possible. Would I take a bet that hey, it will be 15-6 by August? I wouldn't take that bet. The bet I could win from that bet, right? It is possible. Bet, but I just wouldn't take it. I'll find some other bet to make. Right, especially because NNDM, this is more of a, I want to consider this a speculative play. They're not really making too much revenue right now. They're expecting the revenue growth in the upcoming years. So right now, what's really going to be driving this stock on NNDM is going to be the, it's going to be what, just news that the company comes out with. If they come up with some new technology, with some new printer, with some new customer, then yes, the stock price can jump dramatically. I could see that happening. But right now you're expecting over almost 100% increase. Definitely a long shot, but possible. And also, guys, while you're here, make sure to hit the thumbs up on the stream. It helps so much with the YouTube algorithm. So definitely appreciate that. So let's take a look at some earnings. Mobin, you're hoping acquisition of Silenex might pull some strings on NNDM? How so, if I may ask? S&P opens up at a record after blowout earnings from Facebook. Oh, yeah, so over AMD, I thought you were still talking about NNDM. I think Lisa Su mentioned it. Excuse me. I think Lisa Su mentioned it during their earnings that thing was still going as expected, and they were expecting to close by the end of this year. I forgot. I know Lisa Su mentioned it somewhere in their earnings call. I forget the actual words she said though. Let's see, what else do we have? Economy surges to start the year as GDP jumps 6.4% in the first quarter. So someone was just talking about hyperinflation. I think the real question is how much is it, like, is this type of like GDP growth only going to happen this one quarter? And that's pretty much what the overall Fed has been saying, right? That it's just maybe 1 or 2 quarters of crazy growth, but then from there on we're going to see back to normal. So I think we would just have to wait and see. Stocks making biggest moves in the pre-market. Facebook, let's see. Facebook obviously up after beating expectations. Comcast, they beat estimations. The stocks were up 2.9. Generac, share surged 6%. I don't follow Generac, but I had a coworker who used to really enjoy this company. He had sold some puts. I'm hoping he's running good there. Then we have eBay. eBay reported earnings. Its shares tumbled 7.6% in pre-market. I haven't really followed eBay, but I mean, eBay I felt had so much room to grow. I still use eBay from time to time. But yeah, Caterpillar, McDonald's were up. Revenue was above 13% growth. Anything crazy, any cool ones? Let's see what's trading right now. Overall, everything is green, right? That's pretty cool. I mean, let's hope it stays like this, right? Albert, NIO is not a company I own or follow. I don't know why. I really don't know why I don't follow it. It's just there are certain companies that give me vibes. NIO for no real reason, right? It's not because it's a Chinese stock. I own plenty of Chinese stocks, right? I own Huya, I own Tencent, I own JD. So but I just don't know. I don't know why NIO just gives me vibes, and it's weird. Sometimes those vibes are what determine if I should go into the company. So, and again, there's no actual proof for me to have those vibes. It's just some random feeling I have. So I don't follow the company. But I do believe I might do their earnings today, Albert. For me, I don't think at any opportunity I would buy NEO. I would rather focus on other companies. And again, right, that's the great thing about this market, right, Albert? A stock that I might not enjoy, you might enjoy. And I might miss out on those gains. And I'm okay with that because there's so many companies that can do great returns in this stock market. We don't have to have every single winner. So if I just don't like a company, it's okay because I know I can find a winner elsewhere. But I think, right, NEO reports earnings today. We have Amazon doing earnings today. We have Twitter doing earnings today. I'm actually pretty interested to see how Twitter might do, right? We saw Pinterest saw a decrease in monthly active users. We saw the opposite from Facebook. Now I want to see what's happening with Twitter. Are they seeing a slowdown or seeing a growth? Skyworks, I feel, is one people are expecting a lot from too. Let's see what's trending right now. And let me just look at my overall portfolio. Man, T-Dog took a hit, right? T-Dog, I want to say technically, in technical terms, it's sitting at a great price right now, right? It's bounced off this price multiple times around high at 160s, low 170s, and that's where it's sitting right now. T-Dog actually seems pretty cool if I was to do short-term trades. I don't do short-term trade though. Ouya's down. I have some red in my portfolio. T-Dog, small position. Facebook, I'm happy. Facebook, it's a big position in my portfolio. It is up big. Roku is up. Skills is up. Spotify is up as well. So we have some good plays up right now. That's pretty cool. Where's my Unity at? Unity is at 105. Oh man, Unity I think gave us such great buying opportunities. I'm super happy I loaded in this one. Nvidia too, right? I can't wait to their earnings, but their earnings are not till May 26. I can't wait that long. So let's see what's trending. Trending, Apple's trending, right? We have Facebook trending. Clover Health is also doing good. Ford, wow, Ford and T-Doc. All right, these two are down about 8%. I might try to take a look at them then. See if there's some form of opportunity within these two stocks that are down. And one thing, right? Even though stocks go down, even the stocks that go up might still give us buying opportunities, right? Even though Facebook and Google are up big, I do think in long term of things, those are still pretty cool companies. So does anybody have any other stock they want to take a look at today? Good stocks raised. Economy starts. There's jobless claim lowest since March of 2020. That's actually pretty nice. 3 Dow stocks reported very quarter results. McDonald's did good. Merck missed. Jabiki, good morning. Buying and ready to buy. What are you buying, Jabiki? Currently, I don't think. Let's take a look at that one, Renegade. Apple, Facebook surge. Biden says American democracy is rising anew. All right, so let's take a look. All right, yeah. We'll first take a look at Doug. He mentioned Max Linear before, so let's Max Linear. This is a semiconductor company too, right? They produce audio stuff and radio frequencies, radio frequency chips, high performance analog, and mixed signal communications. They have $2.9 billion. Martin, yes, good food, market cap, online groceries are going crazy. Martin, you're gonna enjoy my friend Riz Fizz. Dude is big in good food. I'm pretty sure it's the same good food. Is it TSEFOOD? All right, so right now, right, Max Linear, future growth. This is a company growing at crazy levels, 26.6%. Right now, The company is not profitable, but they are positive in cash flow from operations. So I'm happy, right? They are a growth company. They are a company with positive cash flow from operations. Doug, this one seems pretty cool, right? I know we've looked at them before. I think you might have talked about them, but I really like them. This is more like, let's say, there's like 3 growth stock stages, I want to say. There's growth stocks that have either no earnings and no revenue, no earnings and no cash flow from operations, but are growing at crazy levels. Then there's growth stocks that are growing at crazy levels and they're at least positive in cash flow from operations. Those are usually the stages I like the most, because it tells me already that they're making money from their everyday business. And this one would fall into that list, Duck. The only thing I would say I'm not too fan of is their balance sheet, right? They have short-term investments of 148 million and they have more debt. They're already a bit leveraged, even though they're not profitable. I want to say that's the scariest thing I'm not liking about their fundamentals, Doc. But one thing, that wouldn't scare me away. It would just make me look a little bit closer. I would have to find out when that debt is due. If that debt is due 3-4 years from now, that's something I could care a little bit less. If most of this debt was short-term debt due like in this year or maybe even next year, then that would be a little bit more of a red flag for me. So let's see, MXL, the stock price, right? You just mentioned they did earnings. It is down, right? It is down about 10% from its all-time highs, and with the small market cap. They are turning profitable. Yeah, are they profitable in EBITDA, Duck, or profitable in GAAP numbers? Because looking at GAAP numbers, they're not. It doesn't seem like it just yet when they're taking a look at trailing 12 months. But they are expected to be GAAP profitable within the next, or at least close to it by the next year. But yeah, I'm really liking this huge growth right now. So now it's more just understanding that market. But if that market is seeing 26% revenue growth, Duck, then it's definitely a market that is growing at these levels, especially for such a small market cap. So MaxLinear definitely seems like a pretty cool play, for sure. Only thing is it has pulled back up a nice amount, right, Duck, in the past year. So it could be very volatile, right? It could be because of already past 6 months is up 44%. It could be a slow year for it. It doesn't mean it is, but it's possible. Nice. Jabiki, out of your list, I really like a lot of them. You for sure. I like DraftKings, AMD, and I like Sorens. Palantir and Upstart are 2 I don't follow too much. But that seems like I've heard a lot of great things. I know I've looked at Palantir before and I've looked at Upstart before. And both had great financial numbers. But yeah, that seems pretty cool. Mobin TTC update. Tattoo Chef, right? Tattoo Chef. Has there been any major news? Hey, look, that's me. Doug, yeah, and I mean that's good. I don't think volatility is a risk if you understand it's volatile. I think volatility is a risk when you're not able to handle it. If you see your stock drop like crazy and you're not prepared for that, then that's when volatility is a risk. But me as in general, right? My stocks dropped like crazy. I had no emotion trades whatsoever. It was just more of just picking, making my portfolio a bit more concentrated. So like I said, volatility, in my opinion, no, it's not a risk as long as you know what those that your stocks can drop and go up like crazy at any moment. Yeah, so right now, Mobin, no real updates, right? I think I did a video on, when was this? A week ago, right? Yeah, a week ago I did a talk. I did TTCF. There hasn't been any recent news. So Mobin, usually if I look at a stock, I normally look at a stock once every 3 months to really look at any recent news. Looking at stock price movements, like this, not something I normally do. So The stock, I'm not buying anytime soon. I'm still green on this position, and I personally, let's say I didn't have a position, I wouldn't mind buying at these levels. But I'm happy with my exposure at the moment. Joseph, what's going on, Joseph? What do I think about HIMS? Oh, Mobin, yeah, no updates to my position, Mobin. Not intending on selling. I'm pretty sure I haven't sold. Yeah, no changes, nothing whatsoever. Not selling, but not buying. Happy with my exposure. I don't believe I sold. I don't think I sold. Let me see real quick. Overall count. TTCF. No, I haven't sold. I definitely haven't sold. Max Linear non-GAAP earnings per share 55 cents, beat by 5 cents. GAAP earnings per share were 5 cents, beat by 11 cents. Oh, nice, yeah. So I mean, Simply Wall Street, Doug, shows me trailing 12 months, and they probably haven't updated the 10Q report either. So sometimes things like Simply Wall Street and Lazy FA, they obviously can't update until the company submits the 10K report. So it could be possible that the company hasn't done that yet. But yeah, they were profitable. Nice. And they're super profitable in non-GAAP earnings per share. Normally non-GAAP is what I prefer to look at growth stocks. GAAP is more when the company has been more developed. All right, Curaleaf or Medman. All right, Renegade, let's take a look. I don't know what any of them are. Curaleaf stock. So I'm just gonna look at fundamentals. Renegade. These two are markets I personally don't follow, right? But the stock is down 25%. Let's see what we can find here in Simply Wall Street. Hopefully we can get some information. So Doug, normally, so Gap, I let me just non-GAAP for growth. I prefer to look at non-GAAP for growth stocks, because non-GAAP usually does not count for in non-GAPs you get taken out, for example, expenses from stock compensation. You also get taken out one-time expenses usage. And for a growth stock, that makes a huge difference, because usually these growth stocks are super small. So those types of transactions of one-time expenses, of stock-based compensations, and other non-cash movements can really affect earnings. When we come to talk about it in a big company, normally you see their non-GAAP and GAAP earnings are pretty much very similar, because they're already so big that those one-time expenses, that those stock-based compensations, or anything outside of the norm don't really move it. So that's why for growth stocks, I personally enjoy non-GAAP. I still look at GAAP earnings, right? I still do, for sure. But I prefer more non-GAAP for that reason on smaller companies. Just because it makes such a bigger shift on prices. Right? For example, Tattoo Chef. Tattoo Chef is a perfect example. See, let's take a quick look at Tattoo Chef on how, right? Tattoo Chef is such a small company, $1.5 billion. If we take a look at their past numbers, right? Look at these earnings. If you were to just look at GAAP earnings, you would be like, oh my God, Tattoo Chef is killing it. They're doing the amazing. But this was a one-time form of income that Tattoo Chef got. So their GAAP earnings are kind of feeding a lie. If I was to look at non-GAAP for Tattoo Chef, it would have been more flatline. So that's why a one-time deal on Facebook is another one. Facebook gets hit with a lot of one-time expenses, but it doesn't really move it too much. Let's take a quick look at Facebook. Let's see if we can find out when some of those one-time expenses came out for Facebook. You can't really see it, right? Because it's such a big company. It might have happened sometimes here, but it's definitely not as prominent. It's not as visual or dominant as it was for Tattoo Chef, Doc. So that's why. Stock basics, I'm doing good, and I think my stocks are doing pretty good. I was just looking at my list right now. Facebook and Roku, Spotify, Google, these are all up for me, and those are some decent positions on me. Oh, my bad. Renegade. I kind of shrugged it off. So let's which one was the one that we were looking at before I kind of went into Tattoo Chef? Kim Jr. Kim, yes, you should be able to. If you go to YouTube, go to my channel, go to videos. They are here on videos. You would see them as live stream. For some reason, they don't show up as in here. But if you go to videos, you'll be able to see them. The live stream right now, and live stream here. So you should be able to see them, Kim. Let me know if you can't. They usually just show up here with the uploads. Maybe I might just, and guys, while you're here, make sure to hit that thumbs up. Helps out a lot. But definitely, if you can't find them there, Kim, let me know. All right, so let's keep looking at Curaleaf, right? Like I was saying, Renegade, not a market I follow, but let's look at the company. Future growth. This is a company expected to grow at crazy levels, 27.3%. They are almost profitable in GAAP earnings. They are also positive in cash flow from operations. So they're looking pretty good fundamentally, Renegade. Now, if we take a look at financial health, their health also from, let's see. They have debt of about $300 million. They have cash of about $73 million. An inventory of 244. I would just say, I wish, because were they profitable? Yes, they are. They're expected to be profitable, and they're positive in cash flow from operations. They're expected to become GAAP profitable pretty soon. They're probably already non-GAAP profitable, but the only thing I would say about them, Renegade, is that I wish their balance sheet was a little bit better. I wish they had a little bit more cash than debt. But right now, they're expected to grow at crazy levels. And overall, this is still a brand new market, right? Especially here in the United States, we're still getting states that are legalizing. This stock, I believe, will continue to be very volatile over time. I'm not bullish in this market. I don't invest. Not that I'm not bullish in this market. I'm just not as bullish in this market as my other stocks. So I really don't follow this market. But $11.4 billion valuation, it's more just understanding the actual market from here. Fundamentally, they do look okay. Strong future growth. Decent balance sheet. I wish it was a bit better, though. What is your CB cost basis on Spotify? Oh, below $100. Below $150, Martin. I mean, I'm pretty sure. Let's see, Spotify. My first Spotify video, I think, was on May of 2020. I think was my first Spotify video. So 11 months ago, and it was, I think, yeah. So whatever the stock price was, 11. I remember doing a video on Spotify when the stock was $150, and like I was getting hate that, hey Jose, you're pumping up the stock at $150. You shouldn't be buying at these prices. And luckily, I got lucky, right? Right, 100 below. I remember it was 150 when I was doing this video, and then I did it again at 192. Luckily, I got luck, right? But It's one I really, really enjoy. It was a tier 1 stock for me last year, Martin. It was a tier 1. The audio market is one I'm very, very bullish. At these prices, I'm not as bullish as I was a year ago. But I still believe it can continue to grow. That's why I haven't sold any position. If I didn't have a position at these levels, I wouldn't mind increasing, right? It's seen a crazy, crazy pull down. I do believe their earnings were a bit overreaction, because even though they saw a decrease in monthly active users, this is a company that more cares, is more dependent on premium subscribers. And that's all a growth. And that growth beat expectations. So I believe right now this earnings was an overreaction for them. And it could be one of those places that... no, I got in before then. I did an update video during the Joe Rogan deal. So right now it's a tier 2 stock. Tier 2 stock. And that changes, right, over time. So last year was a tier 1, so I built up a great position. When it goes from tier 1 to tier 2, Martin, it doesn't mean I sell any position. It just means I'm probably not going to buy as much right now. So tier 1 stocks are the ones that if they drop big, those are the ones I'm going to pick up first. Then are going to be tier 2. Then it's going to be tier 3. Fat Metal, yes, you are. You're coming in right at the end of the stream. Electric Soldier. But Fat Metal, how you doing, man? Hope everything's going good. I appreciate that Spotify video recommendation you did. You recommended Fat Metal. That video did really well for me. So if you guys ever have any recommendations on what stocks, see Fat Metal, yeah, someone was actually, Electric Soldier was just talking about T-Doc. So I think I might do a T-Doc video as well. So if you guys ever have any suggestions on video guys you want me to make, feel free to let me know. Oh, my camera is blurry. Let me know if that fixed it. Oh, nice, Fat Metal. And who was it? Renegade. How much of your portfolio in tier 1 and tier 2? Tier 1 at least... Tier 1 at least 30% of my portfolio. Maybe even 35. There's 4 stocks in tier 1. Only 4 stocks in my tier 1, Martin. And those 4 make up about 35%. Tier 2, I want to say tier 2. So my top 4 positions make up about 30 to 35% of my portfolio. I want to say probably a little bit more. If you include my tier 1 and my tier 2 stocks, I think that's probably about 75% of my portfolio. Then I have a lot of tier 3, but tier 3 are super small companies. So I enjoy having a lot of companies, right? You might think like, I have about 40 stocks in my portfolio, right? So people might be like, Jose, 40 stocks in your portfolio. Why do you have so many? But out of those 40, like I mentioned, 4 stocks make up 1/3 of my portfolio. So I do believe concentration is good to some extent. I concentrate on my heavy players. But at the same time, I do believe there's a lot of great companies out there that can do great returns. So I don't mind buying small positions in them either. So I do a mixture of both worlds, right? I do concentration to some extent, and I also do diversification to some extent. And that's why I say this investing style, this investing world, there's no perfect method. Some people could, a portfolio with 10 positions can do amazing. A portfolio with 1 position can do amazing. A portfolio with 60, 70 positions can do amazing. So guys, though, I do want to say I am done for now streaming. I gotta go work on a video. So I might do a T-Dog video. Baba, has that reported earnings? Should I wait for after earnings or before earnings on that Baba video you guys want? All right, Mobin, I'll do one before their earnings. When is their earnings? Our earnings date is, I don't know, May 24th. It's estimated to announce between May 14th and May 24th. They haven't given an actual date. Okay. We'll probably find that out later on. Maybe next week. Mr. Wonderful has 900 positions. Pretty impressive. That's insane. All right, guys. Well, thank you for stopping by for the stream. And like I said, these are usually 1 hour streams. It's pretty much just to get to feel what you guys want to take a look at, what stocks you guys want me to review. So I appreciate the support, guys, and make sure to hit that thumbs up. I'll definitely release at least one video today, but I have some stuff, some personal stuff I have to go handle. So at least one video, maybe two. So take care, guys. Have a good day. Let's hope we have a good trading and investing day. So take care. And if you guys missed the stream, make sure you guys can find it on my YouTube uploads.